Hello and welcome to another Astranti bite-sized video. These little videos are designed to help you with certain topics to get through your CIMA exams, and today we're looking at a topic that's really important for those of you sitting your BA4 level exams, because we're looking at the topic of the internal audit. And in fact, what we're doing is breaking that down even further, and we're examining the steps that are undertaken during an internal audit. So before we begin talking about how we go about developing an audit plan, let's just return to our clothes shop that we talked about earlier on, where we talked about maybe one of their key risks would be to manage the amount of theft they were facing in their store. Now I want you for a moment to imagine this clothes shop isn't just one single shop, but is in fact hundreds of shops all over the globe. Now, not only do they have hundreds of shops, they also have loads of internal departments, purchasing departments, IT departments, financing departments. And so, maybe we're starting to see a bit of a dilemma here. Is it possible for the internal audit department to be able to audit every procedure in every department every year? No, it is simply impossible that an internal auditing department could cover everything in this clothing retailer. And so what would have to happen is that priorities would have to be drawn up into which procedures, which controls, or which departments would be reviewed. Now, the internal audit department would change yearly. Sorry, what they would focus on, I should clarify, would change yearly. So once the organization has decided on their priorities, once the key audits have been agreed, then we can move on into the audit planning or the development of the audit plan. Now, of course, these need to be agreed. So the priorities found for the organisation, but they also need to be prepared. So not only the internal audit department know about it, but of course the department that are intended to be audited also have to be aware that they are going to be audited so they can prepare. So let's have a look at what might feature in one of these plans. Well, overall objectives. What is the organisation hoping to achieve by the internal audit department auditing a specific department? Are they looking to, or do they think that department is high risk and so is worthy of an audit? We've already seen, haven't we, with the different types of audits, there may be different reasons why the organisation wants the audit to go ahead. They should also highlight the key risks. So what risks are the internal audit looking into? And then how will the internal audit review those risks? Of course, in the plan, we're also going to have to say what departments are to be audited, because, of course, as we have just said, the departments also need to be aware that they are to be audited. And as we've just said, there are different types of audits. So, of course, we should say in the plan, or they should say in the plan, what types of audit are need to be conducted. And you'll see a link, really, between the overall objectives and the types of audit. Then we move on in the plan to look at the key processes or the procedures to be reviewed. And again, they should be highlighted, really. That will all flow from the department that's been chosen to be audited and the key risks that have been chosen to be audited. And then, of course, the processes and the procedures will stem from that. What procedures are already in place for those risks? What processes are there to be reviewed? And then also staff planning. What staff will be needed to be used? What levels of staff? Who's going to do what audit? What role in what audit? Etc. etc. And then, of course, the times of each audit. So here we go. We've got all these factors in a plan that need to be agreed upon, and then all of this needs to be drawn up. So The plan as a whole is based on risk assessment, because the key risks that are facing an organization in a particular year should be the key areas for focus for the department. Well, that makes perfect sense, doesn't it? The risks are highlighted and then the reviews made to see how that can be improved. Because remember, what we highlighted in purposes of an internal audit is to make the organisation better. So of course it should be based on a risk assessment which would highlight the key areas that need to be focused upon. Now we stick with our clothing retailer. We've already talked that one of the risks may be theft. Another of their risks, of course, may be that their clothing lines are going out of fashion. So what would that mean for a clothing store? Well, it would mean that their sales are starting to drop. Less people are coming into the store. Another problem that is facing a clothing store could be overstocking. They have too much stock left in inventory, which of course means that they're not selling things quick enough, which means that they've spent too much money, which is hold up an inventory and not doing anything at all. Now, of course, there are many of these risks. This is not a exhaustive list. This is just a couple of examples for you. But what we're trying to say here, what I'm trying to say, is the most important risk should be identified, and then the audit will be focused around those risks. Now, if we stick with the theft example that we've been using throughout this example, it might still be a real problem. This might be one of the key risk areas for the clothing store. But what happens if theft was subject to a detailed audit last year? Could be high risk still, but the detailed review has already been done, so it wouldn't be covered again this coming year. So it's also important to realise that the input of the senior management and the board would be included in the process to ensure for a strategic level focus. Because of course, if this internal audit is a way to make a company's processes more efficient, is it as a way to make their control procedures improved, then of course we'd be looking at ways to improve the organisation to make sure that they can move forward, fulfil their strategic objectives. Now, the input of the senior management and the board would normally be done through the audit committee. Now, we'll come to the audit committee later on. Now, what would happen for this section? How would we get the input of the senior management? Well, what would happen is a series of interviews would be conducted with the senior management by the internal auditors. And this would help highlight any risky areas that auditors think should be a purpose of, or an area of focus, Now, if the organisation already has the ERM, now do you remember what the ERM stands for? The Enterprise Risk Management Programme. Then, of course, the risks that have already been identified in that formal programme will also help guide the work done by the internal auditing department. And in fact, many auditing, there we go, sorry, that's slightly late on screen for you. Just to reiterate what we've just said, they give their input through the audit committee to give strategic level focus. But what I was just about to say, before I interrupted myself, was internal audit departments often update their plan of engagements throughout the year because their focus may change as the organisation's priorities change, or in fact risks become more evident in the organisation. And so again, then the audit department's focus would have to change. And again, this makes sure that the audit activity is aligned with the organisation's strategic and operational objectives. So we're making sure that the audit activity is focused at the most important areas of the organisation's business so that it can fulfil its objectives. And then once all this has been sorted out, the plan is submitted to the senior management and the audit committee, and everybody has to agree before the wheels are set in motion. So there we have it. There's the agreements that need to be made by an organisation to see where the internal audit should be focused. That's the first stage of the plan. Then the following plan will be done on an audit by audit level. So once the key area has been focused on, the audits have been chosen, this is the plan, actually puts the practicalities, makes things happen. And the first stage in the plan is making sure that the skills required on the internal auditing team are there. So if we return to our theft in clothes retailers, might it not be really useful to have a security expert on the team? Well, you imagine it would, wouldn't you? Because a security expert would be able to use their skill and expertise to see any problems with the control procedures that have been put down, or to see any failures, or to see how, in fact, the system could be improved. Because remember, that's the second part of the internal audit. And so if you can match these skills with the audit, it will make for a far more effective internal audit, which will then help, of course, the organisation achieve their objectives. We then move on to look at the team and members, because of course you've got to think, well, how many team members will this audit need? What skill levels do these team members need to be at? Then we'll move on to timing and duration. Can you see these are just really the practicalities of the specific audit? So here we'd be looking at timing and duration, making sure that the timings are okay for the audit team, but also, of course, for the department that's going to be audited. And let everyone know how long it's expected to take. Of course, we've already taken this from the last plan. We'd bring in the key risks. So if we're keeping with our in-store audit, we may still be looking at the theft maybe of stock, or even perhaps in another audit, maybe looking at theft of cash. And then, of course, we know there's different types of audits to be undertaken. So it's really important to let in this planning stage rather, to let it be known what audit tests are to be undertaken. And we'll come across more of this later on. And then finally, just to make sure that any resources that are required for the internal audit are used. So do they have the right technology? Do they have the correct testing equipment? This is the plan for each specific audit. But one of the key elements to planning the audit is making sure the audit risk is understood. Now, what exactly is audit risk, I can hear you ask? Well, this is the definition. It's the risk that an auditor may fail to detect material errors, problems, or misstatements of accounting balances. So just let's focus on this first bit, that an auditor may fail to detect. So we're not looking at the risk that is the focus of the audit. We're in fact looking at a different kind of risk here, the risk that the auditor may fail to do something. And in fact, we've got a nifty little sum to work this out. Very useful sum indeed. So we can see the AR at the beginning of the equation stands for audit risk. Okay. We then would have IR, which is inherent risk, CR, which is control risk, and DR, which is detection risk. And so here we go. Let's have a look at the calculation. The first, as I said, is inherent risk. So the risk that is inherent in the issue. So imagine we're returning to our clothing store, and this time there's a high risk of theft of the clothing from the store. High risk. But there's a low risk, isn't there, that someone's going to come in and steal the light fittings in the shop. So what would that tell us about the controls? Well, it should tell us that there should be high measure of controls put into place to guard against theft from the shop floor, but not in regards to the fixtures and fittings of the shop. So there we can see an example of high inherent risk and low inherent risk. And of course, as I said, CR stands for control risk. And the control risk is the risk that an issue may not be prevented or detected and then corrected by the organization's internal control mechanism. So what we're asking here is, how good are the controls that are currently in place? Are they sufficient, and are they fit for purpose? So if we return to our clothing store very briefly, we may ask that the controls that we've put in place to control and minimize the loss from clothing theft will actually control theft. Will a security guard by himself stood outside of the shop stop theft? Or will in fact more controls be needed? Do we need to tag clothes? Do we need people in the change rooms? Do we need CCTV? Because of course, and this makes perfect sense, the better the controls, the lower the control risk, and then of course the auditors become less worried. And so the audit risk is lower. And the last part of our calculation is, as we've already said, detection risk. And detection risk quite simply deals with the probability that an audit procedure just won't pick up any evidence of a material error or fraud during its audit. Now, why may they not pick up any evidence of material error or fraud? Well, for example, perhaps the transaction or the procedure they're investigating is really complex. We talked earlier, didn't we, that the more complex a transaction, the more likely that they would need their own audit department. And it goes hand in hand, really, that with the idea that the more complex it is, the more likely that mistakes will be made and things won't be able to be picked up, just because it's more difficult. If you compare that to our shop, when we're just dealing with theft, actually there's probably quite a low chance, a low detection risk there, because it's all quite simple procedures. We're dealing with our clothes being stolen. How can we improve that? Whereas complex transactions will be high detection risk. There's more likely, there's more chance that something won't get picked up. And so what the audit will do, will plan to include areas where the inherent risk is high, because as we've already said, these are key risks. And so where there are key risks to an organization, as we've already talked about, is where the audit should focus, because that's where they're most likely to make a difference and help the organization achieve their objectives. The audit will also most likely test the controls rather than advise on new ones where the control risk is low. Because if the control risk is low, it means that actually the controls are pretty sufficient. And so what they're trying to do is make sure that they're just being applied correctly by whoever's job it is to apply them. And the audit will also tend to do more testing or have special procedures put in place where detection risk is high. Because as we've said, it's more complex. So it makes sense, doesn't it, to test more. It makes sense to have special procedures to deal with, as is an example, the complexity of something which leads to detection risk being high. So there we go. There we've got the audit risk and how the audit will deal with things such as high inherent risk or high control risk or high detection risk, to make sure the audit is as efficient and as mistake-free as possible. So there we go. That's everything you're going to need to learn about the steps of an internal audit and the audit risk to pass your BA4 exams and get exactly the mark that you deserve. If you've enjoyed this video, I hope you take time to like it, and if you want any more really quick bite-sized videos to help you pass your exams, please be sure to subscribe to our channel. Well, thank you very much for listening today, and of course, good luck with your revision.